All right, welcome everybody to Wall Street Journal's next Super Stock live stream, where we bring you stocks with that 10x to 100x upside potential. These are companies going after multi-billion-dollar opportunities at a key inflection point with multiple catalysts in place. We're up to almost 9 or so 10 baggers plus this year. So in the last, or I should say, no, the last 18 months, so we have stocks like, I'm writing down the list, I can't even remember these. We have Cytodyne up 2,000%, ESC up, I think, 1,300%, Peak FinTech up 1,000%, Fans Unite up about 1,000%, CBDT up 5,000% in 4 months, Imagine AR up 1,700%, Nextech up 1,300%. We're gonna find out if Reliq is gonna be that next, 10 bag or more. So, Lisa, welcome back.
Thank you. Thanks for having me again, Jack.
Absolutely, and Lisa, congratulations on the announcement yesterday. You got another new contract. I mean, these things are starting to come at a faster and faster pace now.
Yeah, definitely. I mean, it's ironic because we're a Canadian company and we're all in lockdown up here. Ontario is under a stay-at-home order, so it doesn't feel like the pandemic is resolving. But in the U.S., our clients are definitely resuming normal operations. So that's been a wonderful surprise for us that they've been able to move a little more quickly than we'd anticipated. The vaccine rollout's gone really well in most of our target states with frontline healthcare workers and vulnerable patients. So that's allowed our clients to focus more on proactive medicine again, which really gives us the opportunity to start onboarding again. And we're actually expanding our care management team in Texas. Certainly this quarter we'll be expanding that team, not in Texas, in Florida, my apologies, to cope with the business that we're getting. So it's been really good for us, especially as Canadians who are getting a little bit pandemic fatigued, to see the U.S. opening up so quickly and to see patients, onboarding onto the platform at a rapid rate. So it's been a good start to spring, let's say.
Yeah, no, definitely. So basically, I mean, like last year before the whole thing happened, I mean, you were ready to, you had this pipeline of deals ready to go, and everything kind of basically you got set back a year.
Yeah.
So now you have this pent up. I mean, this is like a pent up demand right now. You have probably a lot of contracts. I mean, they're really building in this pipeline that's just going to like explode.
Yeah, definitely. I mean, we have a lot of patients to onboard, and so now that our clients are able to shift their focus away from emergency medicine and keeping COVID patients alive to more of a proactive focus, which is the future of healthcare, and by future I mean now, as soon as the pandemic's over or resolved to some extent. And so now that they're able to focus back on proactive healthcare, and we are getting a lot of traction with our clients. We're working through that patient onboarding backlog, and we're starting to get a lot of interest from other specialties. So I think I've mentioned before on this program that when we started in 2017, 2018 with patients, there was only one billing code under Medicare and one under Medicaid for remote patient monitoring. And it was a very narrow group of clinicians who could use it on a relatively narrow subset of patients. Now that subset of patients is enormous, and Medicare and Medicaid have expanded the billing code so that a much broader population of clinicians can use their billing codes. So we're now getting a lot of interest from specialists. So you'll see that in the last 2 announcements we made. That
this deal is orthopedics. These are orthopedics.
Yeah, so it's orthopedic specialists who, to be honest, we hadn't necessarily thought of as the target market segment, but they are caring for patients who have chronic pain and chronic illness like osteoarthritis, osteoporosis. And so being able to monitor these patients in their homes on a day-to-day basis, particularly with respect to things like medication compliance or adherence, has a really dramatic impact on their health outcomes. So we're now getting a lot of pull, with specialists coming to us in specialties we maybe didn't even think of as something where our platform would have a role. But there's certainly significant financial driver for those specialists. Their practices can generate at least an extra $500,000 a year in new revenues at very high profit margins by deploying our platform. And the benefits to the patients are enormous. I mean, it's really important with particularly the chronic pain patients, patients living with not just chronic pain, but sort of chronic disability, that they have access to the kind of support that prevents the depression and anxiety that's really typical in that patient population. So I think this is an opportunity for us to, enter a new market segment, expand our target patient population, but also really do some good for some of the most vulnerable patients.
It's a win-win, and what we've talked about before. It's for everybody, because also for the insurers, because essentially this, having the monitoring prevents people from, developing a more serious condition, ending up in in intensive care, and then all of a sudden you have like a bill for a couple $100,000 in the U.S. right, instead of $50 a month. So it's a win-win for everybody. I think so. The key thing is, though, again, the contracts, they're really coming in and the pace is really accelerating. So I mean, you really, I think when you came onto our live stream, I think it was late February, you hit that inflection point, and the things are really starting to gain momentum. So maybe you can kind of give a little bit of color into this latest contract, because just take us a little bit, drill down into the news release, really what it means, like what you're going to be doing in terms of why did they choose Reliq, and we'll go from there.
Yeah. So, I mean, I think that they selected us because they'd heard about us. We are really the first mover in that community space. So, we do get a lot of inbound calls from groups that have done global searches, or even just, local, asking their colleagues for an appropriate solution. But, Digimed and our contract in California came from those clients doing global searches for a solution that would meet their needs, and we were the only company that did. So, I mean, I think we do have something that's very compelling in the community space, and it's an enormous market. It's at least 37 million Medicare and Medicaid patients who have 2 or more chronic conditions, or now we're expanding it as we add patients who might only have 1 chronic condition like osteoarthritis, but are seeing a specialist. So that's another it's tens of millions, frankly, across the U.S. But, we have this large patient population, and we've developed something that works really uniquely in that space. But there's still only 3 to 5% of that patient population who are enrolled in any kind of remote patient monitoring or virtual care program. So there's tremendous room for growth in that space. And the advantage in healthcare, which is a very conservative market, of being the first mover and kind of establishing yourself as the standard of care, is that you do then get a lot of business from referrals. So that's how the orthopedic practices came to us. And it's very
snowball.
Exactly. It's very common in healthcare that, if one orthopedist or any other specialty or family doctor comes to you, that you'll get a lot of others contacting you as a result. Because as soon as they see one physician using it successfully, then the others want to get on board, especially when there's financial incentives. Obviously, there's certainly patient outcomes incentives, but there's quantitative significant.
I mean, look, at the end of the day, I mean, it's the world of, it's the financial incentive is what makes the world go around at the end of the day, and it's a win-win for everybody. So it's great. So it's again, it's really great to kind of see, like, again, this momentum is picking up as, again, it's sort of, obviously you're doing marketing, but it really helps that as each new contract, it create success begets success in this business because of that referral, that word of mouth, as as things happen. Let me ask you. Okay, so we got a couple of audience questions. Let's just dive in real quick. We got people asking about profitability, and they're asking about onboarding. So Ethan is asking about, okay, so what's new contracts? What is the current rate of patients being onboarded?
I mean, that's we're kind of in a if you remember your high school math and so it's a rapid growth curve right now. So I mean, it literally changes every week. I think you can do the math based on our revenue projections. So we expect that we'll be profitable by the end of this quarter. Profitability basically equates to 10,000 new billable fully billable, collectible patients. So, that's where we'll be by the end of the quarter. I think quarterly going forward, we'll be able to report more detail about patient onboarding numbers. Right now, it's a rapidly changing value. So, it's which is a good thing. We're very excited about that, that every week we're getting a significant increase in onboarding. But I think we'll have a lot more kind of predictability. And once the vaccine's fully rolled out and, the pandemic is largely behind us, we'll have a lot more predictability. Right now, if a variant of concern popped up in one area, maybe that slows that area down for a little while and we focus on a different area. But, we're extremely confident, obviously, that we're going to get to the point at the end of this quarter where we have achieved profitability. So, that's the kind of patient growth.
So we're talking about the second quarter.
Yes. So for us, it's actually our fiscal fourth quarter for 2021, but it's the quarter that ends in June.
In June. Okay. So basically, in the next few months, so essentially, and you mentioned so you would reach profitability with 10,000 patients on the system.
Yeah.
Okay, which is not a lot of patients. It's really like a very, the market you're addressing, and I want to talk about the numbers because the numbers, it's a very important. So that's like a drop in a massive ocean.
Yeah.
Okay, and again, things. So people are asking again. So we have questions about the onboarding. Again, people are saying, and then we have essentially saying, hey, when is the profitability? People want this Nedzad. I think he's saying people want to see the profitability. So we'll
hit profitability by the end of June. So profitability for us is generating over 500,000 in revenue, and that covers all of our expenses and generates a profit for us. So per month, in a month. Yeah.
Okay. And so Brando's asking, okay, so will the company release the amount of onboarded patients then at the end of June?
Yes, we will. We definitely will. Right now, because we've had quite a bit more traction on the care management side than we'd anticipated, which is a good thing. That's one of our, that's the $100 per patient per month number. But at the moment, there are a number of reasons why the patient count is, it's a little bit variable because or at least the rate of growth is a little bit variable while we're still dealing with clients who are coping with issues around the pandemic and some of these variants of concern. But I think it'll be a lot more predictable by then. So, we're going to provide, backwards looking patient numbers per quarter, and then also be able to provide a lot more granularity on patient numbers going forward. And once we get to the point by the end of June where, the pandemic is a little bit more under control.
Yeah, it's so essentially I think this is kind of like the opportunity for investors in terms of, okay, this is because things kind of got thrown way behind, off track with nobody could have predicted a pandemic lasting 2 years. And technically it should be, because I think the Spanish flu was only 2 years, right? So this is, we're already going, so we're pretty much almost wrapped up. So it looks like you're getting the traction. Maybe the growth may not be 100% predictable, I don't know, 6 months out, the adoption in terms of onboarding, things like that. But
I think that the onboarding rate is maybe a little variable between now and the end of June. After that, I think, it'll be a lot more predictable and more to the point. Right now, we have a changing average revenue per user. It's changing in the right direction because we're getting a lot more patients who are being enrolled in the full program at $100 a month. But I think by the end of June, we'll have a better sense of what that mix is so that we can update the average revenue per user and then disclose patient numbers without having people modeling those numbers incorrectly. The last thing we want to do is give people any kind of, overinflated sense of where we're going, but we also don't want to give anyone an underinflated sense. And so, I am biased by the fact that I'm an engineer, and so I'm very driven by data and statistical significance. We're just not at a point where I think we have the level of visibility into at what rate the numbers will grow on a consistent basis, but I think we will be there by June. We need a little bit of that historical data, but I think you can always back out patient numbers what we expect to achieve as our minimum from the revenue numbers. So, we've given revenue guidance. We expect that, pardon me, we'll be profitable by the end of June. We expect that by the end of this year, we'll have done 11 million in revenue for the calendar year, and that we'll end the year at a run rate of roughly 2 million a month. So a run rate of 24 million a year. So, I mean, that's pretty significant growth. And we certainly expect that, given some of the new market segments that we've entered and some of the more significant traction that we're seeing, particularly around the care management piece, that, after the end of this year, we'll be updating our guidance for the subsequent years. It is one of those businesses, healthcare, where, even when you sign the new contracts, it takes a little while to onboard the new people. We have quite a full pipeline of existing contracts, but, we expect the impact from some of the larger new contracts to really hit in 2022 and beyond. But I think it's very safe to say that, looking at where we expect to be by the end of this year, our projections for the subsequent years are very conservative. So
okay, so I want to kind of again, for maybe to update for anybody that's kind of new to the story, I want to maybe, if you can explain, okay, again, in a snapshot, what Reliq does, the market you're addressing, and then talk about the opportunity, the market, kind of the metrics, like what's going to be the path for this to be a $10 stock, like 20x from here, like, which if you start hitting these numbers, if you're doing I don't know, let's say 50 million a year revenues, that type of valuation is in sight. It's not crazy.
Exactly.
Based on the peers, based on the comps.
Yeah. So just to sort of review, our gross margins by the end of this year will be 75%. Our EBITDA margins will be 45%, plus or minus, but we expect 45 or more. And that's a very compelling EBITDA margin, but also very sort of typical for a software as a service company. Typical multiples in the software as a service space are anywhere from 10 to 40 times EBITDA. And certainly for a company that's rapidly growing and that has an organic business that's a little bit more predictable than something that's growing by acquisition, where you don't know where the next acquisition will happen. And those multiples tend to be on the high side. And we saw with Livongo's acquisition by Teladoc, that was the 70-something or 80-something multiple of revenue, not even of EBITDA. At the time, they were operating at a loss. So, I think there's tremendous potential for this company in terms of valuation. It's up to the markets how they want to value a company, but just based on historical data, you can see that, this company, if we got to be a $50 million company with, an EBITDA of 25 million, 20 million, it'd be very easy to see that translating to a valuation of $1 billion. I mean, just... again, no one can predict what the capital markets will do, and they've done.
No, I mean, it's based on the current comps, and the market increasingly
based on data. And you would expect that if we got to 50 million in revenue, you would be at $1 billion in valuation. It's possible even to exceed that if you look at the Livongos of the world. But markets change and valuations change. But based on data, that's a very reasonable assumption.
Yeah, and it's like I think the trend is really increasing, because it seems like the healthcare business. The insurers, everybody likes this kind of things which are these kind of programs which are recurring, that to keep costs kind of predictable. And everybody wants predictability in the healthcare business, between the insurers, between the investors, everybody.
Well, it's even beyond predictability. The big issue is the population is aging and the population is growing. We are, as a population, more sedentary than we used to be, since so much of our work is technology focused. So we're not, tilling fields. So, the reality is the chronic disease patient population is ever expanding. And that's a significant issue for payers, not just Medicare and Medicaid, where it's really a question of whether or not they can survive and continue to exist and fund healthcare in the US. And it's an issue for all of the private insurers as well. This is a relatively new problem over sort of the last 10 to 15 years, that chronic disease patients are so expensive. Part of it is that we've gotten really good at kind of urgent care or rescue for these patients. So we can do a lot in hospital, in the ICU, to prolong the life of these patients. But the bottom line is they don't need to ever be in the hospital. So with these preventable complications, if you can avoid those, you will save trillions of dollars on healthcare. And not only Medicare and Medicaid are aware of that, but certainly the private insurers in the US have kind of dialed into that and figured out that that's the thing where, you know, an upstream investment in proactive healthcare is going to translate to a significant downstream savings. And that's just going to become more and more relevant as the population ages and grows. So, you know, the business we're in, unfortunately, chronic disease is one that's booming. And that's not likely to change in the next several decades. It's likely to just continue to grow. So this is really the time where healthcare systems have to fundamentally change the way that they provide healthcare to patients in order to allow the systems to survive. So what we're doing is very, very timely. And we started a little bit ahead of the market back in 2017.
Yeah. Basically, you kind of started before the market. I mean, the demand was there, but sort of there was a couple things that had to fall in place with the billing codes, which sounds very mundane, but that's kind of the key to maybe. Yeah. Can you explain what that is, the billing code, in case anybody doesn't understand?
Yeah, so Medicare and Medicaid will issue billing codes. Usually they're 5-digit numbers that will allow a clinician to deliver a service. And those billing codes are set in conjunction with the American Medical Association, based around, you know, how they classify procedures or services that are delivered. And excuse me, when a billing code is provided by Medicare or Medicaid, it means that that service will be reimbursable. And so initially there was one billing code under Medicare and Medicaid. There are a lot of modifiers to billing codes. So you have to include modifier codes that are usually 3 digits that basically describe, you know, where the service was delivered and how adherent the patient was, different things like that. So it's relatively easy to have issues with billing codes. Most of the billing codes, when you submit them, you need to put a 0 in front of them. Some of them, it's a different number. If you forget that, the claim will come back. So, you know, we had a steep learning curve in 2018, along with our clients, where their billers were submitting claims, and these were, you know, new programs. And so a lot of claims came back. We have now basically taken over responsibility for the billing codes. So we do the claim submission automatically, and we use our own business logic, the inbuilt billing code information that we have in the platform, so that there's no risk of accidentally forgetting a 0 or not putting the right modifier. So it means claims are processed much more quickly, and you have a very high level of certainty between that and our pre-screening of patients and getting the pre-authorization forms from Medicare and Medicaid. You know that when you put a patient on the platform, you'll get paid for that patient as the clinician, and therefore will get paid as the company.
So these things sound very like boring, you know, and mundane, but you know, the billing code is basically, you know, putting in the right thing and making sure it's, otherwise, if you don't put it in, you're not going to get paid. The doctors, you know.
It's not even just entering the right billing code, it's doing what's required under that billing code. So things, like certain billing codes require that the physician provides a renewed authorization every 60 days, or some require a certain level of adherence from the patient. So they have to log on to the system every 16 days or 16 days out of a month. And so for certain billing codes, you know, we use things like our automated interactive voice recognition to do calls to patients, or the care management center, and to make sure that patients are adherent. In Texas, under Medicaid, which is the program that's delivered through home health agencies, and basically every day that a patient is adherent, you get a little bit more money. So it's very advantageous to make sure that patients are collecting the data daily. So, you know, our platform is set up to support exactly the clinical workflows that are required and the patient activities under that particular billing code. So a lot of the complexity of figuring out if you're a clinician, you know, what do I need to do to actually be able to collect under this billing code, we've automated in the platform. So it just makes, you know, from the clinician's perspective, makes their life extremely easy. And from the patient's perspective, it means that they'll continue to get this service, because a lot of what happens when you have to have a clinician who's busy doing other things figure out the administration of the billing codes, is patients end up, and something happens and their coverage is, their pre-authorization basically no longer applies because the physician might have not gotten the renewed authorization or something else in time, and so patients end up kind of monitored and then not monitored. So we eliminate that risk to the patient, so they get very consistent care, and we eliminate the risk to the clinician of not getting paid. So that's a pretty significant advantage of our platform. Most platforms don't have the depth and breadth of capabilities we do around billing, and also just around ensuring compliance, not just adherence on the patient's part, but compliance on the clinician's part, so that what they're doing, and we have full audit trails in the platform, so that there's Medicare and Medicaid love that there's no potential for fraud if you're using our system, and clinicians love that there's no potential to just accidentally forget something and end up not being able to collect on the funding for the services they have delivered.
Okay, so we got a couple questions. One is, I think you may have asked, or may have been addressed before, but will you need any more funding? Will you need to be raising any capital, but in the next, I don't know, 6 months or so? Is that in the plans?
So we'll be profitable in 2.5 months, so we're not anticipating needing to do a raise to reach profitability, and at that point we'll certainly be generating free cash. The only reason I could see us doing a raise, which would be a very good one, is if we land a larger contract than we were expecting, or a number of contracts more than we were expecting, and we want to be able to really accelerate growth, and in which case we might want a small infusion of capital, but that would be done at much higher valuations, and it would be a small infusion of capital. We're not a business that's ever going to need to raise $50 million. So, a couple $1 million would be more than enough to accelerate growth if we need to do that over the current plan. And I think our current plan has quite a bit of growth built into it. So it's not something that we anticipate needing, but if we did do a raise, if we announced a raise, it would be very good news, because it would mean we're growing faster than we'd anticipated. So.
Okay. Question, I think we've talked about this before, just again to address, what's the competitive landscape like right now?
Yeah, so we don't have head-to-head competitors who we meet in the marketplace. So when I think of competition, I think of you're bidding for someone's business. Who are the other companies who are up against you? And we don't encounter that situation. I think it's because we have something that was really designed from the ground up for the community space. And what we do see in the market, and are usually able to very quickly convert over to us as a customer, there are a lot of device manufacturers. So Dario is one, Foracare, Philips, lots of Abbott, who have a device that, let's say it's a glucometer for diabetes, so they'll have an app that works with that. Those are all patient-centered platforms, and so the challenge with that is, when the patient goes to see their doctor, they can show them the app and show them the data that's on there, but the doctor isn't connected, and there's nobody on a day-to-day basis who's going to receive an alert if that patient has an out-of-norm result. So it's not a reimbursable under Medicare and Medicaid, and only, with the exception of certain specialists, only patients who have 2 or more chronic diseases qualify under Medicare and Medicaid. So if you're monitoring your own diabetes, and even if you had a connection to the clinician, and the clinician could bill, they couldn't bill because it's just one chronic disease. That's the sort of downfall of most devices, is they only do one thing, and that's not billable. And it's the physician who has to bill. So when you have a patient-focused app, where the patient gets the data and the clinician can see it at every visit, that's not a billable event. So that's not the market that we're addressing. It's not the most high value or most profitable market. It's just the direct-to-consumer market. The other competitors that we see in the space, every once in a while you'll find sort of a small regional company, we call them mom and pop shops, we refer to them as mom and pop shops, that have developed, they built an Access database or an Excel spreadsheet that does remote patient monitoring. And they are able to offer that to clinicians very inexpensively, but they don't have any billing or adherence or any other capabilities. And so we switch clinicians over from those kind of platforms very, very quickly. And those mom and pop shops have so few customers and such low profit margins that, we looked at would it make sense to acquire any of those companies to expand the patient base, but it's actually easier to just convert those physicians over as customers, and that's not usually at all challenging. And then, at the other end of the market, you'll see not competitors, but sort of, I would say, probably reasonable comparables are companies like Livongo and Teladoc. So Livongo only, their focus is type 1 diabetes, and that's 10% of the diabetes market. We primarily have type 2 diabetic patients, so 90% of the diabetes market, as well as all of the other chronic disease states. But we can provide monitoring for type 1 diabetics as well. Livongo's real target market is employer-sponsored health plans, so much higher price points, but also much more demanding clientele. So as you have probably seen, if you've looked at their financial statements, both Teladoc and Livongo have very low EBITDA margins, and sort of 10 to 15% best case scenario, and they missed their targets on revenue and margins this last quarter post acquisition. Livongo does a lot with coaching, so it's a lot of human resource driven. So there's not a lot of economies of scale. If you just are hiring more and more and more coaches, you're not going to see the benefit of the volume other than just the increase in revenue, but it's not going to improve your margins. And those companies are focused on their niche, the employer-sponsored health plans. Our niche is much larger, and we own our niche. We're the first mover in that space, and that's a $100 billion niche at least, and it keeps growing as the size of the chronic disease patient population grows.
Lisa, you're like right now. You're speaking with. Our audience is probably 70% retail, but you're speaking with a lot of institutions and with analysts. What do you think? Do you feel that investors, whether it's institutions, let's even talk about institutions, do you feel that investors understand the Reliq story, or if not, what is it that they're missing, which would, if they did understand, would, cause that, an increase in the stock price as that valuation gap closes?
Well, I think there was a lot of excitement about healthcare over the last sort of 6 to 9 months in the capital markets, and a number of those companies, ultimately were more flash than substance, and so that's certainly in Canada, along with the whole COVID issue, that's impacted our healthcare stocks, even the ones that have really viable business. And I think there's always a bit of a pullback when you get so much enthusiasm around a certain sector, but the reality is we have a business that's very strong on its fundamentals. So we're not reliant on a certain sector being the market's darling. We're just going to deliver based on revenue and profit margins. So, I think we're a very compelling story, but I also think that's the kind of story where you kind of have to get out and deliver. We'll need a couple of quarters of, showing consistent rapid growth, which we will have, showing ourselves getting to profitability. I think that's a really key milestone for a lot of the institutional investors that I've spoken to. So we're very close to that milestone. And we are already starting to get institutional investors who've established substantial positions in the company and that have come to us through like Lytham Partners, our IR contact. So they're very good at getting in front of the institutional investors who are at the right stage for your company's stage. But we are very pleased with the traction that we're getting, and with significant institutions, very well-known institutions in California and the Midwest and on the East Coast. So I think we're at the beginning of getting a lot more institutional investment, but a lot of these groups have certain thresholds you have to cross.
Yeah, they want to see the stock, above $5. They want to see on NASDAQ.
Well, I think we'll get a lot more institutional investment once we get to dollar. Certainly, it's a whole different ballgame once you're on the NASDAQ and you're up over $5. But I think you'll see a lot more institutional investment in the next few months as we continue to deliver on our projections. And profitability is a really key milestone for a lot of these institutions. It really de-risks a company, and it's one of those things where people want an investment that's completely de-risked, but that's also a 10-bagger, and those don't exist. So this is a good time to get involved with the company because we may still not fit the risk profile of some of the institutions, which means we're a bargain. But, once we cross that profitability threshold, then we're going to have a lot more of the institutions coming to the table, and you'll see a significant increase in valuation as a result. That's just what happens when you get more and more of your shares in institutional hands, because they sell, they hold rather, they don't sell. And so it just means your float is a little bit smaller, and there's more, demand than there is supply. That's the whole stock market dynamic. So, I think this is a good time to get in with the company. And, I think we are undervalued right now. I think there was a pullback, especially in Canadian healthcare technology stock.
The whole microcap space, basically since February, since like Valentine's Day, I mean, it's sold off like 50% plus. So it's
volume's way down. And I mean, I think in Canada, healthcare technology is getting hit, in healthcare in general, hit in particular, very hard, because we are in Canada, we're in lockdown. We're in stay at home. We're back where we were over a year ago. So it really feels like we're not making any progress on the pandemic. But if you look at the States, we're here, we can't meet in person. And, I haven't seen my father, who's turning 80 at the end of the year, in over a year now, because of the pandemic. In the US, a number of the states that we're working in, it's basically business as usual. So it's just, they're ramping back up to fully normal operations. It's hard to kind of conceive of that in Canada, and I think that impacts our healthcare technology stocks whose primary markets are in the US, and that would include us. But, for us, this is an incredibly exciting time as a business. You should see our team. It's all, just giant grins. Everybody's very excited, and some of our personnel look a little tired too, but they're happy with that. They're much happier being sort of run off their feet than not being busy. And we are certainly going to, expand some of the staff around care management, which is a very low cost to us as a company, but enables us to get to some of these much higher price points. So it's a period of rapid growth for us. It's going to be much more rapid in the second half of the year, once the pandemic really is kind of behind us, at least in the US, if not here in Canada. So it's going to be a very busy year for us. And we're very excited about that. And the market will respond once we get to profitability and people can see, and really understand that this, what we're talking about turns into revenue numbers and profit.
So the next real milestone, the big milestone, is going to be this, profitability by the end of June. I guess that's the thing that everybody has their eye on right now. So we're already.
It's really the metric that the institutional investors are most focused on. That's what really de-risks a company, because at that point you could say, maybe we want to do a raise to fuel growth, but that the company isn't going to need to go back to the market for money and the associated dilution just to get to break even. We're kind of self-sufficient. Once you get to the point, it's like any banks, and once you no longer need money, the bank can't throw money at you.
Right. I mean, once the stock is liquid, everybody wants to give you money. So so the big milestone is June. It's coming right up. We're almost in May. We're halfway through April. So we're basically, we're going to see in roughly 60 days, 90 days. And then after that, it's going to be the next quarter. And if you can have 2 quarters of profitability back to back.
Once we're profitable because we are steadily growing. So, there's not going to be a profitable one quarter, not profitable the next quarter. It's, from there, it's just, building increasing our gross margins and EBITDA margins, and increasing our free cash that we're throwing off every month. So, at the end of the year, we're probably going to have to start thinking about, what's the appropriate use of the free cash we generate every month. But we're not there yet, but that will be a very exciting problem to have, or not problem.
Quality problem. Okay, Lisa, let's wrap up. So 2 things we always ask is other news flow that investors can keep an eye on. What else? You have any other announcements that people?
Yeah, of course. We have a lot going on, and we're very excited about. So we'll continue to share that on a regular basis with the market. I think, we're past that point where it was just relatively quiet. Things are really going to start to pick up now. So we'll certainly be communicating through news releases with the market on a very regular basis going forward. And then, our quarterly, we'll update on profitability. You know that because the end of June is the end of our fiscal year, it's then sort of 4 months until you have to report. So we won't, obviously provide the fully audited financial statements, but as soon as we hit profitability, we will obviously share that with the market, even with whatever disclaimers we have to around those not being audited numbers. But, we'll have lots of news to share with the market.
Okay, excellent. Lisa, so on that note, I want to thank you, and we look forward to the next update, the next contracts, the next big milestones coming up.
Yeah, me too. And thanks very much for having me again. Always a pleasure.
Thank you, Lisa. We'll see you in the next live stream.
Thanks.
Okay, great things at Reliq. Let's get ready for our next presenter, Graph Blockchain. A lot of anticipation for Graph. Let me just set things up here on my screen. And I'm going to bring in Paul, the new CEO. Okay, let's see. Paul.
Hey, how you doing?
All right, we're all set. We're all set. Let's yeah, we're gonna do the slideshow today. We're gonna show the presentation, the official presentation for Graph, right?
Absolutely. Let me flip over that and share my screen with everyone.
Okay, yeah. So let's get that set up, and then I'll do a quick intro, for the video later. Okay, here we go.
Okay, can you see it?
Hang on a second. Okay, it's working perfectly. It's working perfectly. So hang on just a moment. Okay, so I'm gonna do a quick intro, and then we'll go right to this. Okay, welcome everybody to Wall Street Reporter's Discover Day live stream, April 14th, 2021. We're here with Graph Blockchain. This really actually is the debut presentation. We got the new CEO. We got a lot of exciting things happening. So the market for Bitcoin is exploding. So we're at an exciting time. And for anybody that's watching this video later on for the very first time, our goal with Wall Street Reporter's Discover Day, the live streams, the next super stocks, is to bring you those stocks which have 10x to 100x upside potential. So these are companies going after massive market opportunities. They're at a key inflection point, and there are multiple catalysts in place. And following with our approach, we've had a number of stocks that have increased between 10x to 50x in the past 18 months. Let me go through my list. Cytodyne up 2,000%. ESC up I think 1,300%. Nextech up 1,300%. CBDT, Empower Clinics up 5,000%. Imagine AR 1,700%. Peak FinTech 1,000%. So we have and we have a whole bunch that are 500%, 3x, 5x. Too many to count. So we're going to find out if Graph Blockchain is going to join that pantheon, the pantheon of the 10-bagger to 100-bagger stocks. Paul is going to run through the quick presentation, and then we're going to come back for audience Q&A, and it's your questions that make these events special. So please watch the presentation, make sure to ask your questions, and then decide for yourself if GBLC is going to be that, as Joseph says, moonshot, the moonshot. So with that said, Paul, let me put your thing on the screen. Take it away.
Great, thanks. So thanks everyone. We'll see if it doesn't seem to be advancing here. Let me try this again.
I think.
Great. Can you see it?
No, I think we closed. I think you closed it out by accident. So just go back to the slide. The share.
Yep.
Hang on a second. Yeah, because I think you pressed I think you closed the share window.
Okay, here, let me just come back in. Okay, so let me do that again.
Because I don't think you can see me while it's open, so you can't see the screen while it's.
No, I can't. So let me just.
Okay, here we go. Okay, hang on a second. Okay, okay, I got the and just go to the play mode, so we see the full slide. Okay, and okay, now you're all set, and you can, and I'll disappear. I'll come back for Q&A.
Perfect. Okay, great. So thanks, everyone. So a bit about Graph, since this is our first time here on the show. Graph Blockchain is an established blockchain company. And really what we're doing is we're providing investors with exposure to altcoins and using our blockchain expertise to give investors exposure to other decentralized finance opportunities. We're targeted to 3 areas to drive value for our shareholders: crypto acquisitions, crypto assets, and our technology. Our first acquisition that we did was a company called Babbage Mining Corp. And through that acquisition, we're actually the only public company providing exposure to altcoins for our investors. And we consider altcoins to be anything other than Bitcoin and Ethereum, the 2 big ones. Babbage Mining is also bringing with it proof of stake mining, which we're using for these coins. And proof of stake is really the next generation for earning coins off your existing holdings. Everybody's familiar with the miners that they're doing mining, burning a lot of money on electricity, staff, computers going obsolete. Proof of stake is that next generation where really we're just putting up our coins to help run the network in exchange for additional coins. And as Bitcoin goes up in value and Ethereum goes up in value and the blockchain continues to get used and all these coins continue to accept, their use cases make sense and they continue to be adopted, we expect to see significant value appreciation. And, historically, if you look at where things started with Bitcoin, Bitcoin started out at pennies when it was launched. And I mean, this slide gets old on a daily basis. I mean, Bitcoin's now over, $60,000 US. Ethereum, started again in the pennies. And again, now it's well over $2,200 US. And altcoins are looking to be the next Bitcoin and the next Ethereum. And there are over 6,000 of them out there right now. And what we bring with that Babbage acquisition is really the expertise and the brains required to sift through all of these coins to find the next market leaders. And by owning GBLC, you're going to have exposure to those altcoins. And some of these altcoins are very hard for people to acquire. A lot of them are very difficult for people to get their hands on. And that's separate from actually going out and finding which ones they want to acquire. Because there are a lot of good coins out there, and there are a lot of coins that didn't do so well over the last little bit. Despite coins going up considerably, there are a number of coins out there that have lost well over 90% of their value because they turned out to not have a good use case and not really any application to be adopted. So some of the first coins that we've acquired that we've announced the acquisition of ADA and DOT. And those are 2 coins that are really focused on the smart contract space, which is similar to Ethereum. And Ethereum, even though it's at $2,200, there's a lot of issues with that platform and that they're working to fix, but that other people are working to fix as well. And ADA, currently trades around, $1.12. It's actually gone up from there. DOT, again, launched in the penny realm, is trading well over, $40 the last time I looked. So investments in these coins can generate significant returns for our shareholders. If you go back in time and go back to that first launch of Bitcoin, if you were to put $10,000 into Bitcoin way back when it first launched, that would be something that would be, worth well over, $50 billion today. And it's our desire to find those coins that are going to have that level of adoption, have that level of interest, and get them early and hold on to them and provide our investors with that exposure. As I mentioned, we also have our technology. As an established blockchain company, we actually have 2 patents. And historically, we've done a lot of work on the private blockchains. And we're now taking that IP and looking to bring it into the public realm. And that includes launching our own token that we're looking at several cases for. And we've also been approached by others to help them improve the use cases for their tokens and manage their tokens to create something a little bit better. The other areas that we're looking at is acquisition. So I mentioned Babbage Mining, which was our first one. There's a lot of opportunities out there in the decentralized finance space, whether it's insurance, lending, borrowing, exchanges, derivative markets. Coinbase just did their IPO. That exchange was valued at over $100 billion. There's some significant opportunities out there on the acquisition side that we're looking at. Bit of a snapshot for us. We've 355 million shares outstanding. We just did a raise with H.C. Wainwright, so we are very well cashed up. We have about 2.3 million in cost base for tokens that we've acquired, and we're completely debt free. We have a really good management team. Other than myself, we've got Andrew Yu, our chairman, Don Shim, our CFO. And then from the Babbage Mining side, we have Andrew Eastdale, Ryan Hurst, who's on the next page. And then we also have Jamie Heinland and Stephen Kim. So well-rounded team with a lot of experience in this space. And really that acquisition of Babbage Mining is sort of about a month old. So we're just getting going and super excited to share the story and the potential to your viewers, Jack. There.
Hang on, Paul, you hear me now?
Yes, now I can hear you. Perfect. Sorry,
okay, yeah. So now I had the mic off. Okay, sorry about that. Okay, so yeah, let's jump into some audience questions. Everybody, please, send in your questions to the chat, to the live chat. I want to start off real quick. So you just raised a bunch of cash with H.C. Wainwright.
Correct. Yeah. And they are, for your viewers that don't know them, they are really the #1 investment bank in this space. So it was quite, a validation for us to have them take us on. And, it was an overnight marketed deal, and it went so smoothly. A lot of great interest from their institutional shareholders.
They're basically, they're a U.S. bank. They're a U.S. bank. So, and primarily their deal, not primarily, but almost like 90% of their business is institutional.
Yeah.
So are you seeing, are you seeing are they looking at these institutions? I'm curious, what kind of question, what was the typical common questions they had for you? Are they looking at this at GBLC as kind of a way to play altcoins, or what, what's their rationale for investing in the stock?
Yeah, they really like the altcoins. You can go out there, you can get a Bitcoin fund, you can get an Ethereum fund, but there's nobody really out there doing the altcoins. And Bitcoin's great, love Bitcoin, but if Bitcoin goes to 250,000, it's going up 4 times. Some of these coins, the top performing coins, have been, thousands of % a year. And, there's a lot more gain, I think, to come from some of these altcoins at this point in time.
Okay, so you raised so with H.C. Wainwright, you have 10 million cash in the bank right now.
We do, although we are deploying it into coins as we speak. We've had a number of announcements, and I think you're going to see a few more announcements over the next sort of coming few days as our research team sort of digs through some of the use cases and the performance of these coins and make some decisions on where we want to go.
Okay, I guess well, the money raised essentially, it's going to be what percentage of that is going to be deployed in these altcoins?
Very, very high percentage. We're looking at some acquisitions, which would be a much smaller percentage of our working capital. But by the end of the day, I think you could 70 to 90%, depending on how some of these acquisitions go.
Yeah, I mean, it's kind of crazy. I mean, like, why would you hold cash? Because even what is it? Even Tesla, even Elon Musk is putting his cash into Bitcoin, right? So it's, I mean, I mean, in theory, this is a better store of value than cash. I mean, so
absolutely, a lot of CEOs have said, you shouldn't be holding cash, and so firmly believe in that.
Okay, so let's jump into some audience questions. Let's see here. Okay, so Michael Mahendra asking Paul, can you see the questions on the bottom of the screen?
I can.
You can. Okay, good. Okay, so he's asking, what is the news with Coinbase and Graph blockchain? Could you please elaborate on that?
Yeah, so we recently opened a pro account with Coinbase. We're in the process of opening a custody account, upgrading the account to a custody account. And that really just provides us with more access to coins. A lot of these coins that we're looking at, they are only available on certain exchanges. And so the more platforms that we go on gives us more opportunity for, buying. And some of these bigger exchanges like Coinbase gives us more liquidity, better pricing, able to get in at a better price point.
Okay. Dean is asking, what percent of the company revenue is based on the valuation of old? I guess he's asking, what are your revenue streams? In other words, are you just a trading shop? Is this or do you have other? What other revenue streams do you have?
So right now, today, our revenue is going to be based on the change in the value of the altcoins. That's really where we are right now today. We are looking at some acquisitions. Some of those acquisitions do have revenue streams, revenue from their products. So if we do those deals, there will be other ones. If we get into our own coin, or if we start helping some of these other companies with their own coins and their use cases, we can probably see some revenue from that. But right now, for the next quarter, it'll come from the change in the value of our altcoins.
Okay.
And sorry, and proof of stake, and from proof of stake. So as we acquire the coins and we put them up for staking, we will earn revenue off the staking.
Okay. Wait, Jeremy is asking, when you help a company by improving use case of the token, how do you get paid?
So we would probably take on their coins. We haven't finalized anything yet, but I mean, if we're looking at a coin that's in the pennies and companies looking for us to help, we would probably love to get paid in their coin, and then much like getting paid in somebody's stock, when we deliver results, we're gonna own that upside that we help to create.
Okay, so Terry's asking a question, which probably, I mean, this is a lot of people probably would think, okay, so with the growth of altcoins, obviously the altcoins are kind of high leverage, they're growing faster than Bitcoin. So he's asking, why should we invest in GBLC rather than the altcoins themselves?
Yeah, so number of reasons. So one, some of these altcoins that we're looking at are very hard for people to acquire. So I think we've got a much broader reach than most retail investors. We have an experienced team that's looking at coins. As I said, there's over 6,000 altcoins. I mean, there's Bitcoin, and then, if you pardon my language, the joke is they call the altcoins shit coins because there's so many crappy ones. And, while ADA and DOT have gone up and Link have gone up, I mean, there were coins like Kimchi, Orion, co-vesting. They've lost like 90 to 99% of their value because the use cases were terrible. They didn't get the adoption they needed. They didn't get the traction they needed. So, as a retail investor, you can allow us to sift through all of that stuff, do the analysis, do the research, kind of like getting that research report from your brokerage firm, and participate alongside us.
Okay. Question here will you be adopting some similar approach to how Voyager Digital and Celsius Network is?
Not quite sure what they mean by that question, but I don't believe so.
Okay, maybe if you can rephrase the question.
A little more details on what they mean in particular.
Okay, okay. Let's see, what other questions do we have here? Okay, so revenue stream we covered. I guess maybe I'm not sure what Michelle is asking. I think he's asking, like, are you expecting the stock? I mean, you're not going to talk about where you're not going to make a price target on the stock, but can you, how about this? Can you make a projection based on, I mean, what do you expect? Technically, you have a 10 million bucks in altcoins. What do you think your portfolio will be worth a year from now? What's going to be the assets? Can you say that, or that's too?
Well, I mean, it's like saying, you know, how high is the moon, right? I mean, you know, if Link goes up, you know, 500%, you know, our stock will reflect that, and if Link goes up 5,000%, our stock's going to reflect it more. You know, I mean, really, our goal is to get into the right coins at the right time and see where they go. And adoption is really a function of the market, the world. I mean, economies, you know, governments are talking about creating their own digital currencies. I mean, the adoption, people are accepting Bitcoin for payment more and more every day. You know, there's state governments in the US that you can pay your taxes with Bitcoins. So just as that adoption keeps going and acceptance keeps going, we really see, you know, the abilities of these coins to really just continue to grow, you know, astronomically.
Yeah, I mean, so the old coins? I mean, it's kind of, would you say the leverage? I mean, kind of, I don't know, the gearing, almost. You know, is it like 2 to 1 for every dollar the Bitcoin moves up? You know, old coins go up $2, or like what's typically like you're seeing now?
No, I think altcoins move a lot more, and I mean, not all coins will move together. I cited a few examples of some that just went bust. I think these altcoins are moving a lot more, you know, especially some of the ones that we have that are focused on the smart contracts like ADA and DOT. You know, there's that real, you know, use and adoption in contracts being put into work. People needing these coins, you know, for what they're going to do. Again, Bitcoin is that sort of standard for payment. So there are other payment coins that are coming along, but don't really have that gold standard that Bitcoin is. So I think a lot of these altcoins that are focused on areas other than payments can move a lot higher and a lot more exponentially than Bitcoin will.
Okay. Let's see. We got Jonathan asking, will you stake government coins? Is it possible to stake?
I don't know if there are any out there right now. I mean, anything, we will look at all coins. I mean, that's really the whole point of having, you know, the experts that we have and the research that we're doing is looking to see what makes the most sense. So if there's a coin out there that makes sense, we will review it. I mean, I don't necessarily can think of a government coin or you know, a situation like that, but if it happens, that's why we've got the team sifting through all of these.
Okay. Dean's asking, how do you get paid for proof of stake? How much interest do you receive roughly?
So I don't know what you mean by how. So we get paid in coins, and the interest really varies, sort of 5% to 10%. A lot of these things are fluid, depends on how much they need, like anything, supply and demand. Ethereum right now, as an example, is paying a lot for their staking and their miners, because I think people have sort of gone off it in favor of Bitcoin, and the return on Bitcoin is not quite as high as it used to be because everybody's interested in it. So it's a very dynamic field. So you basically expect 5% to 10% annually.
Okay, so we got a question. What are your, you know, what's your cost? What's the burn rate with the current model? How much of that 10 million are you going to keep on hand to cover, you know, the operational costs?
Yeah, so before we raised the 10 million, we had over $2 million of cash on hand, and our model is quite, you know, we're not a high cost model. Between our audit fees, our listing fees, you know, I would say our burn rate is, you know, $700,000 a year. And this is not an expensive model that we're running.
Okay. So, okay, that's a, I mean, that's actually, yeah, reasonable expense. I mean, Bitcoin is a reasonable expense right now. Okay. Okay, what's, we got a question here. I think somebody was asking, what is, I guess, what is next? What is, I think, or where did I see this question? But yeah, I mean, like, what's, you know, what's the next, you know, in terms of milestones? What can we expect to see the next, you know, 30 days, 45 days?
Yeah, so I think you're going to start to see, or not start to see, you're going to see us continue to deploy the money we raised into different coins. So you're going to see that. Much like the Coinbase announcement, you're going to see us get onto additional platforms so that we can extend the reach of coins that we can get. We're going to see some announcements around proof of staking. Now that we're on Coinbase, we'll be doing that through them. And hopefully we'll be able to share something on the acquisition side. We're looking at about 5 acquisitions right now from a company that's creating their own coin, again in the smart contract space that we really like what they're doing. There's a couple of exchanges that we're talking to. One of them is quite impressive, and with Coinbase's valuation of $100 billion, really like this exchange that I'm looking at. They're quite different from Coinbase. They have a lot of different offerings. We're talking to a company that has NFTs, non-fungible tokens, and has some really interesting clients. And then again, on our own token, we're doing our research there and looking at different use cases and gaps in the market. And we don't just want to do a Me Too coin. We really want to see if we can do something that really there's a good need for. Otherwise, there's no point.
Okay. So it's interesting. Oh, so you're looking at some acquisitions. You said you're looking at 5 potential deals
right now. Yeah.
Okay, and it seems like it kind of covers some interesting areas, from exchanges to all the our audience loves acquisitions. I mean, this is you got to do one of these deals just to do it.
We'll do it if it makes sense for the shareholders.
Perfect.
But I think from what I've seen on all 4 of those, all 5 of those, they're all very good. But the devil's in the detail, and coming to terms that make sense.
Okay, and what's do you think there's a possibility of doing one of closing, or at least announcing one of these in the next, let's call it, I don't know, 45 days?
From an LOI, for sure.
Okay.
Some of these are very well established, platforms that will require, I think, a lot of technical due diligence. But I'm hoping that I can do an LOI on one of these sort of 5 areas in that time frame.
Okay. Yeah. I mean, because you definitely have. I mean, you have a good public vehicle. I mean, you have. It's a lot. I think it would be attractive. It's an attractive vehicle for companies to merge into.
Absolutely, and these have all come out since the Babbage acquisition, and sort of that last month. These have all come to us. And we see. I get a lot of emails sort of daily on, hey, would you look at this? Would you look at that? So, there's definitely, being the only public company out there right now doing altcoins and really focusing on the decentralized finance space has definitely led to a lot of opportunities coming in the door.
Okay. Jeremy's asking, what is the percentage inside ownership?
One of our biggest shareholders is actually a public company called Datametrics. Datametrics owns just under 20%, I believe. I haven't looked in the last little bit, and I haven't looked at the insider reports. I would say we're probably 30 to 40% inside ownership.
Okay. Let's see. Any other questions? Okay. Let's kind of wrap up. I guess, Paul, I'm going to ask you, our favorite question, which we ask at the end of every interview for new companies. In your opinion, Paul, what are the top 3 reasons why investors, should consider investing in GBLC today?
I think altcoins are an amazing space. We give people access to those altcoins, a basket of altcoins, not just one. We do all that research, analysis to sift through all those use cases. Rather than picking, your own coins, we'll do that for you. We'll have access to coins you won't have. And as a public vehicle, we have some really interesting opportunities coming our way in terms of acquisitions.
Okay. Okay, Paul, on that note, I want to thank you. This is your first presentation here. Well, hopefully we'll have you back on the next few weeks with some news for the next update. And thank you everybody for joining today's live stream, and we'll see you on the next one.
Sounds good. Thanks everyone. Appreciate it.